Good morning, everybody. It is Tuesday, the 3rd of February. You join myself, Ryan, and of course, Michael Brown for the morning blast. The usual warnings apply. There is no editing whatsoever that goes into these. So if you are listening to the recording rather than listening live, like many of you do not be shocked by how slapdash it could seem at some moments. Trigger warnings and disclaimers usually apply. Obviously, nothing we say here is trading or investment advice. We don't apologise for the expletives that you will hear, or indeed the tangents we take. Michael, how are you?
Well, very good morning to you, Ryan. Good morning, everyone. I don't know what you're on about, slapdash. This is like a well-oiled professional machine, mate. But I'm in a good mood this morning. Stocks are up. The market's green. SPOs are above 7K. All is right in the world again.
I do say slapdash because I was reading Friday's market update yesterday. So maybe that was aimed at more me.
No, we were just trying to make sure our listeners were paying attention.
Yes,
and thankfully, Clive was.
Exactly. And speaking of Clive, let's crack on.
Indeed.
Market update and levels to watch from indeed our good friend Clive Lambert at Futures Techs. I'm making sure I'm reading the right one today. Equities, keep calm and buy the dips. I think that's something, we've been saying that for a long, long time. And yes, as you just mentioned, Michael, it pays dividends yet again. The S&P rallied nicely yesterday after a weak start and now eyeing its all-time high at 7,043. The world is not ending. DAX futures, they retook 24,618 and has roundly cleared this since. The Eurostoxx 50 is making new all-time highs this morning as Clive went to print. Ditto for FTSE futures. Bund futures, German government bonds are offered after another failure at 128.34. Bitcoin is trying hard to hold on to support at 75,000. 58,000 is the next downside target below that Clive is watching for that one. In FX space, we continue to see some unwinding of the recent dollar weakness trade. Yes, we said that yesterday as well, but one to watch. In the metal space, volatility continues. Gold and silver are staging recovery trades as we went to print. Also, copper rallying nicely. Why has Ryan said copper? You ask us. Well, because I'm long copper, so I'm going to talk my own book. No one else will. Silver retook 82.14, so that's a tick for the bulls, and now they're eyeing the next hurdle at 89.25. Platinum and palladium also making nice recovery noises. LME copper, London copper, bounced from yesterday's early low at 12,414 and is green again today. Woohoo! Back to highs on all of these. No one would be surprised if that was the case. I saw some people saying, we're not going to see those highs in gold for another 40 odd years. And as Michael said, I reckon it'll be a lot sooner than that. And I make him right. Moving over to the oil space, Brent is kicking around a Fibonacci level at 65.95, trying to decide which way to jump. Henry Hub, the American nat gas benchmark, is trading like it's an even bigger animal than usual, although it's been pretty calm so far today. A big down day yesterday. Yeah, we had a lot of stuff kicking off yesterday, a lot of weather-related moves in Henry Hub. TTF, which is the Dutch gas, a European gas benchmark over on this side of the pond, kicked lower on the open, then broke support at 35.17. It gapped lower again this morning, so quickly unwinding the recent gains it's had over the last week or so. EU carbon markets doing the opposite, posted a bullish engulfing pattern yesterday, a call to halt its recent sell-off. And finally, power markets are looking at all of this in a rather confused expression and doing not a lot. So yeah,
just like your two podcast hosts is the B, forgot to add on there.
Pretty much, yeah. I'm surprised he didn't do that. Pretty much. Also, we had this not mentioned. He hasn't mentioned the Aussie dollar, but sure you're going to tell us more. But we've had a rate hike from a major central bank.
Well, we have. I mean, are the RBA major? Do we like the Aussies that much?
Come on, look. Be kind to our Antipodean friends.
I'm only saying it in case any of my colleagues are listening and just a cheap attempt to wind them up, to be honest. We will get on to that in a second, actually. I did just want to mention gold very briefly, because obviously, as Clive sort of alluded to, we have seen some notable stability coming back into the metals complex. Spot gold north of $4,900 an ounce this morning. What was actually interesting yesterday was, I'm not going to make this a regular feature, but if you look at a lot of the notes that some of the banks and brokers were putting out yesterday, yesterday, pretty much everyone was reiterating and kind of singing from the same hymn sheet, saying what we've seen is more of a positioning flush out than anything fundamental that's changed. The fundamental backdrop is still solid, and actually a number of institutions on the sell side have raised their gold price targets for the end of the year. JP Morgan being the most notable. I think they're at $6,200 an ounce now for the end of 2026. So although we have seen obviously some very, very violent moves to the downside and price action remains very, very whippy indeed, that fundamental bull case, people are still very, very much believing in that. And for what it's worth, I do as well. Anyway, moving on from that, we might as well start with that RBA decision. Why not? Because, as you said, Ryan, the Aussie dollar about 1.25% firmer this morning on the back of what you could reasonably term a hawkish hike from the RBA. They raised rates by 25 basis points to 3.85%. That was in line with economists' expectations, although Aussie swaps had only priced about a 70% chance of that hike being delivered. So you had a little bit of a boost to the Aussie dollar on the back of that. In addition, you had a unanimous vote in favour of that decision, so no dissents whatsoever, while the accompanying policy guidance noted that inflation is likely to remain above target for what the RBA termed some time. And in fact, they don't actually forecast inflation getting back to the midpoint of their target range in the latest summary of economic projections. So it is very much looking like this is going to be the first of a few rate hikes down under, although Governor Bullock said that she does not know if this is the start of a tightening cycle. In any case, the consensus very much favours that the RBA will pull the trigger on another rate hike at the May meeting, which would be, well, not the next meeting, but the next meeting, but one, if that makes sense.
It doesn't.
Besides that, in terms of other catalysts from yesterday, just a few bits and bobs worth mentioning. The first is the ISM manufacturing data that we had out of the United States, which actually came in much, much better than expected at 52.6 in January, well above the prior 47.9, and in fact the highest level since 2022. The details of the report were also pretty optimistic as well. The new orders sub-index back into expansionary territory at 57.1, while employment, that came in at 48.1 compared to the prior 44.9. So although that implies that the manufacturing sector is still shedding jobs, they are losing those jobs at a much, much slower pace. And that is just, well, further evidence that the US economy remains very robust and very resilient under the surface. And in fact, that potentially that resilience is broadening out from just the services sector to other parts of the economy as well. Sticking with the United States, we did have news of a trade deal yesterday. The US and India having finally struck an accord on trade. That lowers India's reciprocal tariff rates to 18%, 18%, from the prior 25%. But the trade deal also means that the US has removed that additional 25% tariff that India was paying and that had been levied over the purchases of Russian crude. President Trump announced this trade deal in a very long-winded Truth Social post, as you might be able to imagine. Various conditions and other things have been agreed. The most notable of those, or at least the one Trump is boasting about, is that India has pledged to buy $500 billion worth of products from the United States. As with all of these sort of purchase commitments that have been made, it's all well and good sort of shaking hands on that one, but whether or not any or much of that 500 yards ever materializes remains to be seen. We don't actually know what products they have committed to purchase or the time frame over which those purchases are meant to take place. Go on.
Just on that, that was a proper shock for me because I didn't even know he was over in, or anyone was even in India talking to the Indians.
It was sort of been bubbling away for a while, hasn't it? Because they were meant to be getting this done last autumn.
Yeah, so it was in the papers ages ago, when it was going to be done, and obviously the Russian oil factor was kind of the thing holding it back. But there was I don't remember seeing any headlines or anything saying people were, the Indians were over or they were flying over to India. It seemed like just out of nowhere in the evening. The cynic in me, part of me is like they were looking at the stock markets going, right, we need a good headline for today. Rushed it through. Little did they know the stocks were rallying anyway when they decided to announce it. But no, obviously it's a good thing that it's being done. But as you said, though, this 500 billion, as we're seeing with all these promises, like South Korea and Japan spring to mind. Also, same goes with the AI spending promises that companies do. It's all letters of intent all the way down. Like none of, we saw Nvidia come out yesterday on the day before, wasn't it? Saying basically this 100 billion that we, quote unquote, promised to invest in OpenAI, it's going to be nothing like that.
No, there's going to be tens of millions instead, but
Yeah.
we don't know how many tens, and it's going to be spread over a period of time. But yeah, you're right. The US-India thing did come as a bit of a bolt from the blue. I wasn't particularly expecting that either. Maybe both of us have been asleep at the wheel. There is every chance that that's been happening. But either way, it is another trade, quote unquote, deal that has been struck. And again, I think just from a sort of broader perspective, there's obviously been a lot of noise on the tariff front with Trump using trade levies as a negotiating tactic once again over Greenland, over Canada, et cetera, et cetera. But I think this just reinforces the idea that on the whole, we are still on a trajectory which is towards a cooler and a calmer tone in terms of the trade rhetoric. And I think that would probably be likely to continue into the midterms later this year. The other thing, actually, just on that, and I think Bloomberg had a note out, one of their columnists wrote a note on this over the weekend, Trump seems to be now changing where he's made this tariff threat towards Canada 2 weeks ago, and that was the last we heard of it. These threats are not only quite obviously a negotiating ploy, but they're, the administration aren't even seemingly following through on this anymore. So just another thing to feed into that jigsaw of trade is not as big a worry for market participants now as it was this time in 2025, this time last year.
Yeah, it just adds further kind of weight behind my thinking that he's making up these bold tweets, policy via Twitter, but really it's policy via the shitter, because that's where he's posting them from. Just because he gets bored and thinks, I'm going to roil people up a little bit here.
That is a disgusting mental image, but I think you might well be onto something, to be honest.
Yeah, but it's not, it's not completely, unheard. Well, it's not completely kind of something you wouldn't believe is possible at all, right?
No, not at all. The worrying thing is that's actually very, very believable.
Yeah, exactly. That's what I'm trying to get at.
In terms of other bits and bobs from yesterday, just very briefly, France, they have finally adopted a budget. Le Cornu, the Prime Minister, survived a couple of no confidence votes yesterday. Of course, they've used a constitutional measure to implement that budget without it getting passed in Parliament. Bit weird, really. There's a lot of political posturing going on because the socialists, who Le Cornu is effectively ruling in coalition with or in agreement with at this point, they weren't happy enough to vote for the budget itself. But they said, if you use Article 49.3 to pass the budget, we will abstain in a no confidence vote, which means you can keep your job. It just sounds like posturing ahead of elections next year, to be completely honest with you. But there we are. France has a budget. The finance minister was on the wires this morning saying that he hopes that they can achieve economic growth of as much as 1% this year, which, I mean, if you're hoping for that, then, well, that says it all really about where the French economy is going.
One thing to note that this is the French and the French budget, and especially as it didn't go through the usual measures to get passed.
Give it a week.
Well, give it a week for it all to unravel, but also keep an eye on protests and stuff trying to shut down Paris.
Yes, absolutely. I mean, if they haven't started already, then they're probably just putting on their yellow vest as we speak.
Filling
just
up the mop spreader.
Exactly. Just two other things lastly before we move on, both on the AI space, actually. Oracle, they raised $25 billion in a bond sale yesterday. This was an 8-parter with the longest maturity being 40 years. Of course, Oracle are just sort of the main sort of debt financed AI stock at this moment in time, and it does kind of feel like that's all going to end terribly at some point in the future.
The main protagonist of the AI investment.
That's the word I was looking for, and I couldn't quite. It was on the tip of my tongue.
I can't think of words like believable, and yet I can throw out protagonist.
Yeah, you've clearly had your Weetabix this morning, mate, haven't you? The other headline in the AI space, which broke late last night and was confirmed overnight, was that SpaceX, they have merged with xAI, of course, two of Elon Musk companies. SpaceX saying that space-based AI is the only way to efficiently scale the technology. Of course, SpaceX have applied for permits to put as many as 1 million satellites in orbit around the world. Elon Musk thinking that within 2 or 3 years, data centers in space is going to be the most efficient and cheapest way of scaling this technology. In any case, the combined entity is valued at $1.25 trillion. $1 trillion of that is SpaceX. $250 billion of that is xAI. Guy Johnson on Bloomberg actually made a very interesting point this morning in that SpaceX is what you would call a proper company at this point. They are the only US company that actually has the ability to send astronauts to and from the International Space Station. And of course, they've got hundreds hundreds of contracts with NASA to do various bits and bobs, and with the Department of Defense as well. XAI, meanwhile, is more of a kind of hopes and yeah, I was going to say they're very much a sort of hopes and dreams outfit at this point, and they're also burning $1 billion with a B, $1 billion a month as they try and get Grok working and super intelligence and goodness only knows whatever else. So it'll be interesting to see what happens with that one. Of course, there is continued speculation that they are going to IPO later this year, potentially raising as much as $50 billion.
So
And I think, continue to think that that's going to happen in Texas.
The cynic could argue that they're just trying to wrap a losing company in a company that's kind of an absolute, well, like you said, a hopes and dreams factory with nothing behind it, and
that's what they're doing,
and a bit of a scoundrel, and they're just wrapping that around. Well, they're wrapping around something that's far better and hoping to dilute the two together, basically.
Well, you know what's going to come next, don't you?
Go on.
Well, I would give it 6 months, maybe, and all the IPO talk ramps up and all the interest around that really gets going. Why wouldn't they just reverse merge it with Tesla and have it listed that way and turn Tesla into a SPAC? Because Tesla, in their earnings report, have already gone, we're not making the Model S, we're not going to make the Model X anymore, we're going to repurpose those production lines to make humanoid robots. If you've got Tesla making humanoid robots and you've got XAI doing all the tech that goes into that, and SpaceX has got the data centers that power all that tech, why not just smash it all together?
And also, the higher the Tesla share price goes, the more likely he's going to get his $1 trillion payout.
And how much higher do you think the Tesla share price is going to go if you say to the retail crowd, you know what, this company that you absolutely love, we build rockets now.
And robots.
It's going to go to the moon, without the coin of pun.
I can't help but feel like now that I've been sucked into this journey just so you can get that pun out.
No, I'd literally just thought of that. Okay, but I do think that could be the way that this pans out, in all seriousness.
I've got to be honest with you, that sounds like a very, very, very shrewd long-term play if he's not already doing it.
Well, we will see what happens. But that's all from me on that idea.
Well, thank you very much for that. So today's topic du jour, obviously government, and this is at the request of Michael Brown, because as usual, we try and dampen the bullshit that we see out in the markets. And at the moment, it's all around a government shutdown, or the government shutdown that really isn't. Because
quite.
Because it could be getting all undone today anyway, but it's only really been over the weekend. And reaction, well, the markets, what does it mean for markets? Not much, because pretty much most of the government is funded. Yes, we might be seeing delayed data on Friday, but I feel that that's any excuse to delay the data they'll take with both hands. But go for it, Michael. What's on your mind?
Well, yeah, I think you're absolutely right. I mean, I think it's important, obviously, just to contextualize things, it is a partial government shutdown, not the full government shutdown that we saw back in October, November of last year. So that's the first important difference. We have about half of the federal government that is still funded and operating.
But it's a partial, I think partial is even being a bit extreme. It's a small faction of government that isn't. But the problem is the headline will be, but the part of government that isn't being funded is Department of Defense, etc., and ICE. But anyone that's on active duty, etc., is still getting paid regardless. The SNAP payment is still going through. So even the part that's meant to not be funded is still being funded to a large extent.
Yeah, exactly that. And I think the other key difference with where we were sort of at the back end of last year is that there is very much a path out of this government shutdown, and it is a bipartisan path with both the Republicans in the Senate and the House, the Democrats in Congress, and President Trump all having said, we don't want this to be prolonged. This is in nobody's interests. We're just going to get this sorted. And in fact, as you rightly said, the Senate have already cleared the package that is going to reopen the government. There are 6 funding bills that are still to be passed. The House, the way that they're going to sort of frame all of this is 5 of those are just going to be passed to fund the various departments through to the end of the fiscal year, which is the 30th of September. And then the remaining one, which is the Department of Homeland Security, which is obviously very, very contentious at the moment, given what's going on with ICE, immigration enforcement. They're going to pass a 2-week funding measure for the DHS, which will basically give lawmakers time to debate everything and thrash out some sort of a working compromise to then fund the DHS through to the remainder of the year. So it's very, very different. And as you rightly say, again, all of the usual suspects, all of the headline writers, government shutdown, oh my God, world's going to end, etc., etc., etc. I would argue that the vast majority of people in America probably don't even know the government shutdown. I mean, yes, you're going to see it on the news, but you're certainly not going to feel any sort of impact in your day-to-day life.
Yeah.
And it's also not going to be a major story from a macroeconomic point of view. You're talking, providing that things get back up and running today, which is very, very likely, you're talking about having lost 2 working days as a result of the shutdown.
Yeah.
So there will be basically no impact on any data whatsoever.
Put it this way, okay? So a bit of a history lesson, history with Ryan. Come and sit on Ryan's lap for a bit of an education. This is the 22nd quote unquote shutdown, because I really don't want to call this a shutdown, since 1976. During that time, when we've had proper shutdowns for the most part, which is during more than half the previous 21s, the stocks posted gains during those times, and that's when we had proper shutdown. When we had this shutdown before, which was like how many days? Like 40 odd days?
43, I think. Yeah,
the 43-day monster shutdown between October and November. The S&P returned 2.5% through the whole thing. Treasury yields barely moved, and ended around 4.1%. These calendar-driven shutdowns. What I mean by that is basically over the weekend because the house weren't around. It's just completely one to shrug off. Do not get tied up with it. Do not get involved. Do not try and imply this because of this is happening, or this is the reason why metals collapsed yesterday, or the reason stocks were off yesterday. Just please, just don't feel like you need to use this as a reason to justify anything that's going on.
No, absolutely. The one impact that we are going to see is, of course, today's JOLTS report that was referencing December. That has been postponed. And also the Bureau of Labour Statistics confirming that the January employment report, which was due on Friday, that has also been postponed. Now, the way that I was sort of framing this to clients yesterday and this morning is it's annoying. It's a bit frustrating that we're not going to get the jobs report on Friday, but it's not the end of the world because, again, the data will have been collected. We're talking about losing 2 or 3 working days at the most. So as soon as the BLS come back, they're going to turn around and go, well, okay, we lost X number of days. Let's add X to whenever the data was meant to be released. And that's when we're going to release it now. So I would fully expect that we get the January employment report either next Tuesday or Wednesday would be my sort of working assumption at this point. Is getting the payrolls print 2 days late or 3 days late that much of a disaster?
No, do you know why?
Absolutely not.
Do you know why? Because we get ADP anyway.
Well, I thought you were going to say because it means we can go to the pub earlier on Friday. Well, yes, we do get ADP.
We are going to the pub on Friday. If anyone in London wants to join us for a pint, we are going to be in the Crossbees opposite Leadenhall Market. But ADP and Challenger job data is still going ahead. BLS, to be honest, I just think they'll take any excuse with both hands not to do a bit of work.
Well, potentially. They are civil servants. The other thing just to consider on the whole issue of government shutdowns before we move on to the day ahead is all of these bills fund the government through to the end of the fiscal year, which is, of course, the 30th of September. That is a very, very interesting and important date this year more than most because, of course, we have midterm elections in the United States this year, which are being held on the 3rd of November. So nobody is going to want to have a government shutdown just on the eve of those midterm elections when campaigning is really stepping up a gear. So I think this funding battle or funding fight, whatever you want to call it, it's something that's going to possibly subside once all of this gets sorted out today and over the next week or so. But it's also something that's going to come back later in the year. Yeah. And there's going to be another round of political brinksmanship and negotiation whereby, of course, either side is trying to extract concessions in the run up to those midterms. But also both sides have an incentive to ensure that a deal is struck to ensure that the government is functioning in the run up to those elections. Yeah. So, again, something worth bearing in mind for the rest of the
However, counterpoint, and I'm not saying this is going to happen around the midterms, but I mean just going forward after the midterms, perhaps. It's very, very clear after especially the monster 43-day one that we had, markets really don't give a shit about government shutdowns. Most Americans don't really give a shit about these government shutdowns. There's workarounds, people getting funded in other manners and whatnot. In my opinion, it probably makes shutdowns more likely going forward, even especially if they're just short, like little short and sweet shutdowns. Previously, they were seen as the devil. We can't have them. The world's going to end. And now we've had a couple, and nothing's really changed. Makes me think that they might be something that we see more of going forward.
Yeah, well, the impact on public opinion is an interesting one because there's kind of two things that can happen. You either look at it and you go, well, support for the party who gets the blame for shutting things down is going to plummet, or the view is that actually everyone just looks at it and goes, you know what, I thought politicians were a bit of a shambles. This just reinforces my expectations. And I think as time goes on, more and more people are just leaning into that latter scenario of, well, do you know what? Congress isn't working for me, and I think they're a complete mess. Now they've shut the government down. I still think they're a complete mess. So, that's another sort of narrative to come into things. It kind of hurts all sides equally, is what I'm trying to say.
Yeah, no, absolutely.
Anyway, in terms of today, because of the partial government shutdown, it means that there really is absolutely nothing of any interest on the economic calendar. We've got nothing due from Europe this morning. We were, of course, going to get the jobs data this afternoon. That has been postponed. So the only thing of any note on the economic docket today is the latest New Zealand jobs data, but that doesn't come out until 9:45 this evening. And I certainly shan't be hanging around for that. Regardless, if you are, unemployment is expected to have held steady at 5.3% in the 3 months to the end of December. Besides that, we are due to hear from the Fed's Barkin. He is a 2027 voter, as well as Governor Bowman. They both speak this afternoon. And of course, Bowman made some dovish remarks towards the back end of last week, so she will probably reiterate a similar stance in her comments later on today. And it's another busy day of corporate earnings as well. Before the market opened today, we hear from the likes of PayPal, PepsiCo, Pfizer, and Merck. And then after the close, it's going to be the AI and semiconductor theme in focus once again when we hear from the likes of AMD and Supermicro Computing. And of course, that comes ahead of a couple of mega cap earnings over the next couple of days. We hear from Alphabet, aka Google. They report after the close on Wednesday. And then Amazon, they report after the close on Thursday. But for today, that's all from me.
Wonderful. Well, Michael Brown, thank you so much as always. Listeners, thank you so much for getting involved in taking the time to listen to us. Hopefully you put a bit of value into your day and a smile on your face. Whatever you're doing, keep it tight, stay safe, and